U.S. indices look a bit weak in the pre-market trading of Monday. Before we start, a quick word from our sponsor. This video is brought to you by XNES, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The Nasdaq 100 has shown itself to be a little bit negative in the early hours on Monday as we continue to threaten the 20,000 level. The candlestick from Friday was somewhat encouraging as it ended up forming a bit of a hammer. But if we were to break down below this hammer, that would, of course, be a very negative turn of events and it could lead to even further selling. Otherwise, a short-term rally will have to deal with the 200-day EMA, currently right around the 20,250 level. And then after that, the 21,000 level, where somewhere in that area I would expect to see further selling pressure. The Dow Jones 30 has pulled back just a bit during the trading session on Monday as well in the pre-market hours, but this index sends a little bit different signal as we are trying to hang on to the 200-day EMA, which is also backed up by the 42,000 level. At this point, we are still technically at the bottom of the consolidation area, but obviously this is a market that you'll have to be watching very closely as it does look like it's going to really test the support. The S&P 500 continues to drift around the 200-day EMA as we are below the 5,800 level, an area that had been important for quite some time. And now we have to keep an eye on whether or not we can stay above the 5,600 level. Right now, it looks like we're hanging around 5,700 and the 200-day EMA trying to sort this mess out. It certainly looks like the S&P 500 could be threatened as well, almost like we're at a tipping point here. So caution is probably the better part of valor in this market.